Now, in the lesson of today, we are going to continue with our discussion of financial documents and tariff systems. Now, notice that financial documents and tariff systems is divided into 4 sections: the financial documents, the budgets and statements of income and expenditure, the cost price and selling price, and also the break-even analysis. So those are the 4 sections that we are going to be covering in financial document. Now, the content of this section of financial document is obviously drawn from the CAPS document, and as stimulated, you are expected, or by the end of this section of financial document, section 1, by the end, you will be able to make sense of the terminologies used in the various financial documents. Okay, you will be able to understand clearly, use these words, and also apply it in trying to solve questions related to financial documents. That is it, with making sense of the terminologies used in what? In the financial documents. Well, you will also be able to, among other things, be able to explain and or demonstrate how the values in the financial documents are what? Are determined. Now, the financial documents we are talking about here, some of them will be personal, like pay slip for a person, or some of the financial documents we are going to be including in our discussion will be like a household document, like for example, the bill which is coming for electricity, electricity bill, like water bill, and things like the municipal bill. Okay, so we will be having these documents as a personal document in some cases, and others will be like a company document. Now, the scope of the financial documents relate primarily, majorly, to business and all workplace documents, including things like payslip, invoices, and quotations. Okay, as I just indicated. Now, some of the documents will contain references to value added tax UIF, which are drawn from the section on taxation in the finance topic. So now briefly, in this first section of financial document, okay, in this first section of financial document, part of which we have had in our discussion, well, there are some few activities that we discussed already. Now, this payslip that we had discussion about in one previous lesson was used to help us investigate things like you have a better understanding of terms that are used in what? In financial documents. We had discussion on things like how much does the employee earn? Okay, discussions on things like basic salary. Here it is brought in a question as how much does the employee earn as a basic salary? Okay, so now in this, our discussion was, what is a basic salary? Okay, what is a basic salary? And were we able to see it from this graph? Well, when you look at it carefully, you would see that here is a mention of basic salary. And when you go through, you will see the value here is what? As basic salary. That is 10,829 being what? The basic salary. Now, in layman's language, your basic salary is like the amount of money you are being told, or you were told that you would earn without any allowance, without any commission, which possibly will be based on how you are hardworking or how hardworking you are, any amount of money which is going to come later is not part of that. Your basic salary is like your naked salary, Then now, the next thing is deductions. So in the second question, it appeared as how much does the employee pay in deductions? So basically, what is this thing called deduction? or what are the deductions? We also had this in one previous discussion, deductions, being the things that are, taken away. There is some money which is taken away from what? From your gross salary. Things like tax, things like medical insurance, things like UIF, this type of deductions that are taken away from your gross salary is what we call deduction. And we also saw that there is a mention of deduction right here. And it's what? 2,878.24. You could see it on the what? On the pay slip. And also terms like what? Like gross salary of the employee. So what is it? This gross salary. Well, the gross salary represents the amount of money that basically all the incoming amount of money, all the money that the employee earns. For example, you would be having there with you the basic salary, and you might be working for a company that will pay for your rent. You will be working for a company that will pay, basically for your transport. They will pay your medical insurance and they will pay everything. So that additional amount of money which is put onto your basic salary is what we call the gross salary. You may be working for a company that on top of basic salary, they also pay the commission. Like each time the product is sold, a commission is given to you. So that commission, that additional payment adds to the basic salary so that you get what is called the gross salary. So that is just a brief, like a brief recap, or like is a way of getting us to remember what we just discussed in one previous lesson. And so the gross salary from this pay slip is also indicated somewhere. Here we go. So here is the mention of gross salary, which is what? 11,329. So that is what we had discussion about in one previous lesson. And it's about a personal financial document being pay slip. Well, we could go ahead and look at one other activity on this concept of what? Of financial document. Then later, in the next series of lessons, we will be breaking these discussions of financial documents and tariff system into what? Into budgets, that is starting with financial documents, then budgets and statements of income and expenditure, then what? Cost price and selling price, and also break-even analysis. Now, to look at the second activity, here we are. So this second activity is appearing in form of a question. And here we go. It is that. Yes. So the question is that we study the pay slip. Well, it's still about the pay slip. That we study the pay slip and then later answer the questions that follow. So this is the pay slip. This first section, we have Starship Enterprises, 48 Trek Lane, Johannesburg, 8155. Then here we have the employee code. The employee name is here, Mr. I.M. Spock. Then job title, Federation Ambassador. Here we have a section for period and date. That is the period for which this pay slip is dated, okay? The period which is covered in the pay slip ends on 2017, November the 30th. Then the date engaged, that is like the date when the employee started working for this company, is what? 2012, January the 1st. And this is the ID number. Well, so the hours or the days, 30 days, that is per month, and the earning, the income that the employee gets. Here we have daily rate, given as A, and we have the total is here. Okay, so we have daily rate is not indicated, it's given by a letter A. But over this period of 30 days, the total amount of money, the total earning of this employee is 48,350. Then we also have what? Deductions. So the deductions, as I indicated earlier, are the amount of money which is withdrawn from the what? From the gross salary of the employee. It occurs as tax, pension, UIF, you know, things like insurance and stuff like that. So here tax is here, 13,236. We also have UIF, which is what? 483.50. Then there is pension, which is 855. The total for all deductions gives what? 14,574.50. Now that we have got this, the net pay is right here. Now notice that the net pay is the money that you receive in a notification in your account. Okay, like once it has been deposited, you receive a notification that so and so has paid you. That is the net pay. And the net pay is normally calculated when we deduct or when we get all deductions from our gross or from the employee's gross what? Gross salary. So gross salary minus all deductions will give what? The net pay. Well, let's first go ahead and see this. For which company does I&M Spock, that is I.M. Spock, work? Who is he working for? Well, notice that in the first box here, we saw the what? The name, the address of the company. The name of the company is called Starship Enterprises. And so in trying to fix this up, we will be having what? Right away, this is activity 1. Activity 1. Now in activity 1, the first question is the name of the company that I.M. Spock works for. Now the name of this company, as we have read here, is called what? Starship. Starship what? Enterprise. Starship Enterprises. This is the name of the what? This is the name of the company that this employee works for. Now the next thing we want to look at is activity 1, part 2. So what do we have in activity 1, part 2? Now in activity 1, part 2, the question here is, how long has he worked for this company? Assuming that this is his most recent payslip. Well, we saw that after the address of the company and that of the employee, this was the engagement what? Period. So this gentleman, that is I.M. Spock, started working in 2012 at the beginning, then up to 2017. So now when you put that into consideration, into calculation, from 2012 to 2017, now notice that he never completed 2017. This payslip is for November, not December. So if we are to do the calculation from 2017, for example, 2017, from it we take this 2015. What we see is what? 5 years. But now the thing here is, this 2017, he did not work for a full year. He worked up to the end of November. And so how are we going to do that? Well, out of the 5 years, we are going to remove 1 month, which is the month of December for 2017. And when we do that, okay, when we do this, when we remove 1 month. That is 5 years minus 1 month. What is this going to give us? Well, this is going to give us 4 years and 11 months. That is 4 years and 11 months. So yes, this is the period that IM Spock work for what? Starship Enterprises. The next question we want to look at is question 3. Well, question 3 is asking for the value of A, the daily rate. Now, notice that it was indicated here that the daily rate in earning is A. But over a period of 30 days, the total amount of money is what? 48,350. Well, this is some good amount of money if you're earning it, 48,350 in 1 month. That is some pretty good money. Well, now he is earning this over a period of 30 days, but they are asking for the daily rate in 1 day. How much is he earning? Well, the daily rate will be calculated. The daily rate will be calculated when we do what? When we divide the total amount or the total earning by the period, okay? By the period of time. So it will be like having the total earning in 1 month in 1 month, okay? Divided by what? Divided by the number of days in 1 month. In this case, number of days. What? In 1 month. So what would this give us? Well, the total earning in 1 month in this case is given as what? 48,350. So we write that down, 48,350. This is what he is earning in 30 days, that is in 1 month. So what is the time period there? 30 days. So what do we get from this? Okay, what do we get when we divide 48,350 by 30 days? What we get in this case will be the value of A, which is called the daily rate. And so let's go ahead and use our calculator to do that. So we will be having 48,350. We are supposed to be dividing this by 30, which is the number of days in 1 month. That would give us in 1 day 1,611.7. So we write that down, 1,611. That is daily earning will be 1,000. Okay, 1,611. 611 point what? Point 0.67. Yes, 0.67. We can put that there. So this is what he is earning in 1 day. Well, which is still some good amount of money. Now, the next question here is calculate the value of B, his net pay. They're asking for the value of B, that is the net pay. How is the net pay going to be calculated? Well, the net pay is calculated when we do what? Net pay is calculated when we minus or we take away all the deductions from the earning, okay? So that is how we calculate the net pay. So we say the net pay, net pay is calculated from the gross salary minus the what? Minus total deductions or minus deductions. Yes, this is how we calculate what is called the gross salary. Okay, this is how we calculate, no, not the gross salary, the net pay. So how is this going to be? Well, our gross salary or the gross salary indicated in this pay slip is what? 48,350. So we write it down, 48,350. Now from this amount of money, we are supposed to take away the what? The deductions. And what is the deduction? The total of the deduction is 14,000 and what? 574.50. Okay, so now from here, let's get our calculator. So we have what? 48,350 minus 14,574.50. When we do that, what do we get? Well, the net salary that he receives notification for when payment of salary is made is 33,775. That is 33,775. Point what? And 775.5. Yes, 0.5 right away. So this is the amount of money that he will get notification for when salary is paid. In other words, this is the physical cash that he can take from the bank. This is the money that will be deposited in his account. The money we are calling net pay. So the next question that we would like to look at will then be question 5. So yes, for question 5, that is activity 1, question 5, we are supposed to do what? We are supposed to calculate the percentage of his total gross income. Is it? What percentage of his total gross income is UIF contribution? And we are also required to show the calculations. Well, the percentage of his total gross income, which is given as UIF. Let's look at UIF. UIF is 400 and what? 83.50. So the question is, what fraction of his total earning, which is the gross income here, is that? What fraction in percentage is, what fraction of his total earning is 400 and what? And 88. And so we say the percentage of his gross income will be, well, the percentage gross income which is contributed as UIF. Okay, it's calculated from what? Well, it's a fraction expressed as a percentage. So it's going to be the UIF, which is what? Which is 483.50. Yes, that is the UIF. And then what is his gross salary? The gross salary is 48,350. Yes, that is what we have for what? That is what we have for the fraction of the gross income, which is contributed as UIF. Now, notice that this is supposed to be expressed as a percentage. What this then means is that we have to multiply this quantity by what? 100. This way, we will have expressed everything as a percentage. And so, what will this give us? Well, we then get our calculator, and we now want to divide what? We want to divide 483.50 0.50. We want to divide it by 48,350. Get there, we get 0.01. Okay, then we want to multiply it by 100. That is 0.01, which we are doing what? Which we are multiplying by 100. Notice that when we do that, what we get is what? Is 1%. So it's very much like saying out of every 100 maybe runs that he gets a salary, only 1% is a contribution considered as UIF. Yes, that is what we call the percentage of his gross income, which is the UIF contribution. Now, in the next question, okay, in the next question, we have been told that Mr. IM Spock's employer must contribute the same amount as him to UIF on his behalf. How much is paid to UIF for Mr. IM Spock in total this month? Now, notice what the question is talking about here is that from this pay slip, we have a contribution from Mr. Spock. That is, IM Spock has contributed this 483.50 for what? For the UIF contribution. But by law, the employer must contribute the same amount of money to the UIF contribution. What is that supposed to mean? If Mr. Spock has given, okay, if he has given 483.5, then also the company he's working for, that is the Starship Enterprise, has got to contribute the same amount of money. What that means then is that he is in contribution getting a double. He is contributing the same as his employer, and so he is getting a double. And so how do you handle the calculation of a double? Well, to handle the calculation of a double, what we do, to handle the calculation of a double, what we do is we look at the what? The UIF, which is 483.50. Okay, so what we want to do is to get his total what? His total UIF contribution. So yes, IM Spock. Earnings or the total contribution. Let's call it earnings, what he earns in total. Alright, contributions. It's going to be 483 times 50, rather 0.50 times 2. Why times 2? It's because Mr. Spock and also the employer will give the same amount of money. So it's like it will be doubled. And when we double that, what we get is going to be his total contribution in 1 month. And that can be calculated right away. So it will be like, well, 483.5 times what? Times 2. That gives us 967. So in our calculation, we get 967 as his total UIF contribution. Okay. Now, the other question is, how much tax does he pay in 1 year? Now, notice that this pay slip is for 1 month. And assuming that the tax he's going to pay is the same throughout the year, assuming that there is no increase in his salary and everything is going to be fixed, they will not decrease his salary like that, then the tax for the full year is going to be this amount of money times the number of months in a year, which is what? 12 months. So say I am for the year. This tax for the year is going to be the tax for 1 month times the period of times the total number of months in what? In 1 year, which is 13,236. Yes, 13,236. What we are going to do is we will multiply this with 12. If we do that, we will be calculating the tax that he will pay over a period of 12 months, which is what? Which is 1 year. And so this will give us, well, with our calculator, that is 13,236 times what? Times 12. So what will this give us? Well, this is going to give us quite a lot, 158,000 in tax only. That's quite a lot, right? 158,000, that is 158,000 and what? And 832. And 832. So yes, this man is really paying a lot in tax. He deserves to get appreciation and recognition. So that is what we have. This is how we carry out calculations on questions relating to personal documents like a payslip. And now with this calculation, I can assure you that you can go ahead and handle a similar question without any problem. And I guess I can then get for you one activity that you can handle under what? Personal documents. So let me see if I can get one activity right away for this type of calculation. All right, so we should be looking for an activity. While I look for an activity to get for you, just get to know that this section of financial documents will immediately be followed by the next section because we have 4 different sections that we have to deal with. So these 4 different sections that we want to deal with, each will have its own activity. And so it's going to be very important that we do what? It's going to be very important that we get this right. So make an effort to understand all this right away. And when you do that, you will be able to attempt any question which comes your way. Well, unfortunately, I don't seem to be getting a quick question right away on financial document, especially the personal financial document. But let me first not give up too soon. Just try to check a little bit, see what we can get from this. So now, well, the next question should then be uploaded later. So I guess this is enough for this lesson. I will check on a relevant question, then I get it uploaded right away. And you will work on it and get for me your response so that I can go over. I mark it right away and I correct it for you. So just make sure you understand this concept well, because this concept of finance is very important. After understanding financial documents well, the concept of budget and statements of income and expenditure will not be an issue. Also, the element of cost and selling price for those in businesses. You buy an item at this amount of money, you're selling it at the other amount of money, or you're producing this and it is costing you this amount of money, and then you are selling it at the other amount of money. That is where now the element of cost and selling price comes in. And also we will be looking at break-even analysis. Break-even analysis is very much like, the time in the life of a business when the cost incurred is equally balanced by the income generated by the what? By the product sold by the business. So these are some of the sections we will be looking at one at a time. So make sure you don't miss any section, as it is going to be very important for you to follow all the sections up to the end. And for this lesson, this is where we do what? This is where we stop.